Okay, folks, welcome to our follow-up commentary regarding the shares of Twitter. I did a video back on January the 9th outlining my critique of Twitter and why I thought ultimately the shares would pull back and I was looking to short the shares. Now, the ride since January 9th being on the short side has been one of great volatility. There have been times where I've had some good profits and the shares have slipped away from me to move back up. At current, we do sit with a profit on our short position, and I'll talk to you about the whys. Why did we add more to our short position despite the fact they had a strong earnings report a month after I did my commentary on February the 9th? The shares initially sold off, but then they began to rally. Now, why did they initially sell off? It's because they lost viewers. The however is their fundamentals improved. So what we're going to talk about today is, in fact, how I believe the viewership of Twitter is trending at current. Then we're going to talk about the comparison of the fundamental analysis that I did back on January the 9th relative to what it is today, because we have had an earnings report. A lot has changed. And admittedly, despite the fact I'm short, the improvement in fundamentals has been favorable. We're not going to talk our book here. We're going to speak the truth. And then we're going to leave off with some technical analysis. And in particular, we want to take a look at how the share price of Twitter is performing relative to rising interest rates. And if you stick around till the end, I'll tell you where I believe the share price is moving near term and short term. So let's get to the initial topic of viewership. You'll remember that back during the election, Twitter was the place to be to get your information, whether it be toxic, non-toxic. And at that point in time, according to Alexa is a web traffic company. And at the time of the election on November the 3rd, Twitter was the 33rd most popular website in the United States. And I had expected after the election that traffic would drop off some, but frankly, it did not. It picked up. Why? Well, you had the shenanigans that took place over in Washington, D.C. during the inauguration. You also had the phenomenon of Wall Street bets. And at the time, Parler, their competitor, was offline. So rather than seeing a drop in visits post-election, visits actually increased. And their ranking improved to number 29th most visited website in the United States. That has changed. Using this Chrome extension, you'll see here that Twitter has now dropped to number 35 most popular website in the United States. Very popular still, but it's not the trend that you would prefer to see, especially in light of the fact that during their last earnings report, the big negative that came out of that report and the reason why the shares dipped initially was the fact that they lost visits and their subscriber growth had slowed. And given this, I'll call it anecdotal, semi-anecdotal evidence here, that it appears as though they continue to slip in their rankings. We'll keep an eye on this. Now, before we proceed to our fundamental and technical analysis of Twitter, I want to talk to you about our friends over at Trendspider, and they are truly friends of mine. In fact, let's go jump over to Twitter really quick again. Trendspider is nearing their third year anniversary, and I met with Jake and Dan. You can see him over here, as a matter of fact. They're the co-founders of Trendspider. I met with them early on when they first started out, and I sent them a congratulations. You could see the reply back, and this is very heartfelt. Thank you, Bob. We appreciate you and believing in us so early on. I saw that product. I had reached out to them, and what struck me about the product was that it was so aligned with my philosophy of using multi-time frame analysis. And one of the primary building blocks of Trendspider, besides the automation and the utilization of algorithms to identify support and resistance levels with the click of a button, is the ability to overlay support and resistance levels from one time frame to another. I'll illustrate that later on. So hypothetically, you're looking at a daily chart, but you want to know if you have weekly or monthly overhead supply or support below. Well, simply with a click of a button, you could identify on that daily chart where there is weekly and monthly support and resistance, because it's far more formidable normally to get through than daily resistance. Sometimes they coincide, but by and large, that's the case. But I will illustrate that for you later on. But this product here, folks, if you're not using Trendspider, you're missing an arrow in your quiver. You need to be able to automate your grunt work while speeding up your technical analysis, and at the same time, improving your accuracy. Reduce costly analytical mistakes and time your trades with precision. How do you do both? You use the alerts. You'll see me use them later on. Also, use their scanning and pattern recognition tools to identify winning chart setups. So Trendspider, go to the Explore page. You can take a demo tour, take a 7-day free trial offer, and they have a great series of tutorials at Trendspider University. And if you need assistance, Dan, Jake, and their team will be more than happy to walk you through this product. So a great product. Use the link below, 35% discount code. Let's get to our fundamental analysis and technical analysis of Twitter. So back on January the 9th, the last time we visited Investors Business Daily and their ranking of Twitter, at that point in time, Twitter was number 16th in group leadership strength. They have since risen to number 6. Very impressive. Their composite ranking overall was at 69. It has now risen to 96. Their earnings per share rating has risen from 26th to 62. Their relative strength, meaning their relative strength relative to the S&P 500, has risen from number 76 to number 89. The group strength, meaning the internet content group, has improved from a B plus to an A minus. And the shares back then had an accumulation distribution rating. That means institutional demand or distribution. They had a score back in January of B. It is now an A plus. So being a short, this makes me nervous to say the very least. Now, what has changed dramatically is that their earnings per share from the prior quarter in January was 12%. Not impressive. That has since increased since their last earnings report to 52%. So very impressive and a big improvement from the last time we had discussed Twitter. Now, moving on to the technical analysis of Twitter, what we want to do is we want to first begin with a monthly view, that higher level view of where Twitter has been to identify where it might be going. We also want to address a serious matter out there. We've had a volatile couple of trading weeks. And the question is why? Why is that? Well, the reason is that the 10-year yield has ripped through the ceiling. So we need to identify what's the correlation between Twitter and the 10-year yield. Is it a negative that we have rising yields? Or is it a positive that we have rising yields, as it is for the banks, energy, and the transportation stocks? So that's what we're going to talk about now. Then we'll segue over to do a deeper dive using multi-time frame analysis on Trendspider. So monthly chart, Twitter, one of the main reasons of why we added to a short of Twitter was this extreme overbought condition relative to its 3 standard deviation Bollinger Band. For those not familiar with a 3 standard deviation Bollinger Band, the fact that we are trading on a monthly time frame, or were I should say, above that level, to keep it simple, you're not supposed to be there on a relative basis. The shares of Twitter remain very far extended. In fact, historically extended despite the sell-off so far in March relative to its rising 48-month moving average. Now, this could be addressed one of two ways. One, it just trades sideways for the rest of the year. The moving average plays catch-up. Or two, the shares correct. So on a monthly time frame, we still have an overbought condition and the potential for a pullback. Now, taking a look at the 10-year yield, I have the 10-year yield overlaid here relative to Twitter. Here's the correlation. They correlate 0.17% of the time, meaning there's almost an inverse correlation between the 10-year yield and Twitter. So the fact that yields are rising is not necessarily a good thing for Twitter or pretty much any other growth stock. Now, the 10-year yield overlaid here in gray, in fact, let me change this to a better, more easily viewable color. We'll make it purple, and that's better. So you can see that Twitter has been rising along with yields, but it appears as though we've reached a limit on the 10-year yield where the shares of Twitter can no longer continue to outperform. So on a monthly time frame, we have a correlation of 0.17% that they trade in tandem. Drilling down to a weekly chart, you could see that any correlation began to break down last week. Now, you can blame the rising 10-year yield, or you can blame the overbought condition on Twitter, or you could view it this way. This was a overbought condition or a mini bubble looking for a needle to pop it, and you could point the finger right at the rising 10-year yield. And when you take a look at a daily chart, you could see that the correlation is really breaking down on Twitter. Whereas we were trending up higher, 10-year yield, along with Twitter, they are now diverging. You're seeing a rollover here. And the 10-year yield is now outperforming the shares of Twitter. So, warning flag on the track if yields continue to rise on the 10-year Treasury bond. Now, moving on over to Trendspider, it was actually their automated trend lines that helped me find a point at which to safely add aggressively to the short side. We'll go to that chart in a moment. But the monthly chart, you could see, was overbought relative to its third standard deviation Bollinger Band in February. It has since pulled back. Let's use the Fibonacci tool here really quick. And you can see on a monthly time frame that we pulled back to the 66.35 mark on the Fibonacci retracement tool. The question is, does this hold? Weekly chart. Now, where we closed on Friday was at or around the lows of the week of February the 22nd. So some support, not great support, not much history there, only 1 week. So the question is the selling over? We don't know yet. Perhaps the daily chart will give us an indication of where we might be going. We know from our analysis of the performance of late of Twitter versus the 10-year yield, if we see a spike up on Monday morning, the probability of Twitter continuing to sell off is pretty good. Now, where admittedly I made a mistake here was I held short into earnings because I thought that their cancel culture at Twitter was going to harm them. Frankly, it did not. Their technology, their ability to monetize visits improved. But I think ultimately this cancel culture is going to do longer term harm to Twitter, especially as competitors rise up and Parler is now back online. That aside, sticking with the technicals, we added more short here the week of February the 15th. Why? It's because Trendspider was able to identify resistance above at around the $75 per share mark. We did add short just shy of that level. The shares did proceed higher the following week. I did not go adding more. Why? It's because I had to consider stopping out if we began to make new weekly highs. Ultimately, we did not. We failed to hold the support level and we broke down last week. And we did so on some considerable volume. Daily chart. Now, taking a look at this chart, you might be saying, where's the support? Where is there resistance? All you need to do with Trendspider, click a button. And there you have it. We bounced right off of daily support on Friday. It marked resistance back here on February the 8th. We broke out above it on February the 9th. gapped up higher on earnings. We have now done a complete retracement. Now, RSI has put in a lower high. It is barely holding on to 50. We are trading down below multiple moving averages and its volume-weighted moving average as well. Now, where we were able to rally above and close above was the 66 level on the Fibonacci retracement tool. Now, we have successfully, from a bull's perspective, we have successfully filled the gap from the earnings gap up. Now, I believe, given the price action on Friday, there's a very good chance that we rally into the new trading week. The question is, will yields cooperate? Will yields stabilize and or pull back? If they don't, I suspect that we'll get a reversal on the week and we'll begin to move down to new lower lows. My price target on the 10-year yield is 1.72 at current. We closed out the week at 1.577 on the 10-year yield. It doesn't sound like much, folks, but when yields move up this far, this quickly, it's detrimental to growth stocks and in particular, technology stocks. Now, going back to the weekly chart, I want to identify good support levels where I'd be interested in stepping in and covering shorts, and I may do so before it hits the support level, but where I might step in and begin to buy the shares of Twitter. And then we're going to talk about price targets. So support that I'd like to see on Twitter is right down here. So I'll set up an alert. And we'll keep this active for a couple of weeks. So I want to know when we hit this support level at around, let's call it $61 per share. It is rising by the time we get there. Perhaps it's $62 per share. But the algorithm will adjust for it. And our alert is set. Now, if we do step in and buy at the support level and it does in fact stabilize, where do I think it's going? Well, resistance level number one is the obvious one. This is where we really got aggressively short at the, now I would call this $77 per share, because by the time we get there, it is a rising resistance level. And that rather than 75 a couple of weeks ago, it'll now be $77, $78 per share. Should we break above that mark, I think that we're heading up here. This is now monthly resistance overlaid onto a weekly chart. This is multi-time frame analysis. I think we could head up to as high as minimum 85, probably up to ultimately $100 per share on Twitter. So to sum things up, at current, we remain short of Twitter. I am thinking about booking profits in that trade. If the shares continue to fall, I will cover at around $61 per share. Look to get long, assuming that we hold this support level. If we do in fact hold and I get long, we'll be looking for a price target number one of $77 per share. Then after that, around $85 per share. Folks, I hope you got some value out of this commentary. Don't forget, subscribe to Trendspider. Use that link below, 35% off. Join us every Sunday and Thursday evening live on YouTube for our live stream where we go over the charts. We also take chart requests. Enter your email address below in any one of the opt-in email lists. Just enter it one time. There is a 5-part video tutorial showing you how my 5 most powerful candlesticks work. If you enter your email address in that free tutorial, you'll get alerted 15 minutes to a half hour prior to us going live. If you're not interested in the tutorial, simply enter your email in to the alert request link. That's, again, located down below in the video description area or in the blog down below. Hope to see you tomorrow night, being Sunday Night Futures Live. Till then, be well.